Hi, this is Jitan and welcome to another episode of TradersTV. In today's episode, we're going to be talking about my learnings from the first quarter of 2018. We've just ended the first quarter and it's been an amazing quarter full of ups and downs. Lots of different things going on, trade tariffs, stock market declines. So it's important we put this in context and we see what we can learn from our past experiences and look for patterns of success and failure. So let's get started.
So what is happening in the month of April? Well, the first thing that is going to be on traders' minds is the ongoing trade wars between the US and China. That is going to be a strong focus. How is that going to affect the stock market, the US dollar? You know, over the past quarter of 2018, we've seen some big stock market declines based upon these trade tariffs, okay? So this is going to be an ongoing thing between the US and China and obviously Europe, Canada, Mexico, renegotiating the NAFTA deal, the North American Free Trade Agreement. So there's going to be lots of volatility to watch out for in the likes of the US dollar, Canadian dollar, Mexican peso, as well as maybe some other markets as well that are highly dependent on Chinese growth. So things like the Australian dollar, we've started to see a lot of weakness in that currency because of these trade tariffs and these potential trade wars. So that is going to be a big focus for the month of April. Also for the US dollar, we've got some big news announcement. We've got the US non-farm payroll, which is basically the employment numbers, the unemployment rate of the US. And we also have the Federal Reserve meeting minutes release on the 11th of April. So these are big data points for the US dollar because the market is anticipating that the Federal Reserve are going to increase interest rates at least 2 or 3 times this year. They've already done it once this year. And now the question is, when are they going to do it again? So we've started to see some strength in the US dollar based upon that. But there's a big battle going on between what's happening with these trade wars and what the Federal Reserve, the actions the Federal Reserve is going to be taking as well. So just something to bear in mind. We had a lot of weakness in the US dollar and now that kind of weakness has turned into strength. And a lot of markets have been quite range-based. Euro dollar has been held in a range for the past few months actually. So these are big data announcements that traders will be focusing on throughout the month of April for the US dollar. We also have the Bank of Canada rate statement on the 18th of April. So over the month of January and February, the Canadian dollar was actually one of the weakest currencies over that period. And we're starting to see a bit of profit taken from those short positions. Some traders are starting to position themselves again for some strength in the Canadian dollar. For some people, it's a little bit too early because it was the weakest currency for quite some time. However, on the 18th of April, the Bank of Canada rate statement is going to be a big one for the Canadian dollar. Are the Bank of Canada, thinking about increasing interest rates, or are they thinking about keeping them on hold? So keep an eye out for that potential volatile news announcement in the middle of the month. We also have the ECB press conference, so the European Central Bank press conference on the 26th of April. Now, for much of 2017, the euro was pushing higher on the anticipation that the ECB would start to withdraw their quantitative easing program. If you recall, after the financial recession in 2008, a lot of central banks, including the ECB, were pumping money into the economy to help prop things up and stimulate growth. So the US has stopped doing that, the UK have stopped doing that, but the ECB are still doing that. So 2017, the euro was going up on the anticipation that the data was coming out very good and the ECB will actually start to withdraw their monthly stimulus and their quantitative easing program. So we've already had comments from ECB President Mario Draghi saying that is a possibility and that is potentially going to happen this year. And we've also had some comments to say that they're going to speed up the process because the data has been so good, or economic data has been so good, that they're going to start to stop that and maybe in the future start to increase interest rates, although that is a long way off just yet. So this is going to be a big one for the euro crosses. On the 26th of April, watch out for the ECB press conference. And also on the 27th of April, so the day after, we have the Bank of Japan press conference as well. And it's an interesting time for the Bank of Japan because obviously they're going through the election process as well. Where the Japanese yen goes does have a big effect on the stock market. Okay, when the stock market declines, we tend to see some flows into the Japanese yen. So in the recent decline in the stock market, we've seen a lot of the yen crosses push lower as a lot of investors move into safe haven currencies like the Japanese yen. So it'll be interesting to see what the Bank of Japan have to say at this press conference, and what their views are on how their economy is doing, and what they're likely to do next in terms of any policy actions. So that is certainly something to keep an eye on as well, more towards the end of the month. Of course, we don't know what the outcome of these news announcements are going to be. So the reason we look at those, or the reason a lot of traders look at those, is to manage the risk on their trades and their portfolio. Because you may find yourself heavily exposed to the US dollar or the Canadian dollar or the euro or the Japanese yen in the run up to these announcements. So it's just important to know that they're there because they could cause some volatile moves, and if you have positions open, then clearly they're going to be affected. So we look at these news announcements to manage risk in our accounts, but also we want to look at the strength and weakness in the market. How is the market going to react to good news or bad news coming out from different central banks? So those are the two primary reasons that a lot of traders will look at these kind of news announcements. It's certainly two primary reasons that I've look at these news announcements, and the reasons why I do so.
So that's how I review my learnings each and every month and each and every quarter. Now you may be interested to learn a little bit more about trading generally, in which case look at the playlist below and catch up with our previous episodes. If you're interested to learn a little bit more about Learn to Trade, then click on the link below and visit our website. I'll see you next time.